Hello guys and welcome to new deep value video. Today we're going to deep dive into the financials of Broadcom Incorporated, ticker symbol AVGO. Broadcom is a company operating in the tech industry. As of the 6th of August 2024, its stock price stands at $152 and has a market cap of 717 billion. Moving on to some key valuation metrics, the company's price to earnings ratio is 35.3, while its price to cash flow ratio is 37.8. Now let's take a closer look at the company's growth over the past 5 years. We can see that its revenue has grown by 127.4%, while its bottom line has increased by 416.9%. In terms of earnings per share, there has been a growth of 398.5%. However, it's important to note the change in the number of common shares outstanding, which stands at 4.5 billion, reflecting a 7.2% dilution. Additionally, the interest coverage ratio is 5.26, suggesting the company's ability to meet its interest obligations comfortably. Moving on to the balance sheet, we can start with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 1.16. This ratio helps us understand the company's short-term liquidity position. Looking at the long-term debt-to-equity ratio, we find it at 1.02 and the overall debt-to-equity ratio at 1.06. Now let's transition to the cash flow statement. Cash from operations is 18.1 billion, reflecting a change over the past 5 years of 86.5%. Meanwhile, cash from investing activities is 700 million, showing a change of minus 95.5%. Furthermore, cash from financing activities is minus 15.62 billion, showing a change of minus 141.5% over the same period. And lastly, free cash flow has grown by 90.3% during the same time from 9.26 billion to 17.63 billion and is projected to grow to 25.52 billion in fiscal year 2025. Moving forward, let's look at the return metrics to see how well the company is utilizing its resources. The return on equity is 22%. The return on investment is 14%. The return on assets is 8.3%, and the return on invested capital, the ROIC, stands at 24.2%. Finally, let's find the acceptable buy price. The first method is conducting a DCF analysis. By using a discount rate of 10%, a revenue growth rate of 13.5% for 10 years, and a perpetuity growth rate of 1.5%, we get a fair value of $119. Secondly, using a multiples valuation of 20 times trailing 12 months price to earnings, operating cash flow, and 25 times trailing 12 months free cash flow, we get a fair value of $80.1. Thirdly, the analyst price target is $197. And putting it all together, we get an intrinsic value of $132.08. And using a 15% margin of safety, we get an acceptable buy price of $112.27, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I rate Broadcom as a hold, as it is not expensive enough to warrant a sell. And personally, I'd consider investing in it only if its price drops to some 110 levels. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye!